Hello. How are you? I hope you're extremely well. I'm absolutely champion. Welcome to this blog. I'm going to be talking a little bit about cash flow forecasting, quite an important topic, both in your AAT studies and also in the real world. Cash flow is literally the lifeblood of any commercial organisation, and if they don't manage their cash flow adequately, it can mean the end of the business. Well, my name's Gareth. Got my contact details there. I'm a managing director with First Intuition, one of the UK's premier accountancy training colleges. We do classroom courses, we do distance learning courses, not just for AAT, but also for CIMA, ACCA, chartered accountancy. So I'm a good point of contact if you've got any questions about your studies. So my email address is garethjohn@fi.co.uk. Also fairly active on social media. You can quite often find me on Facebook or Twitter. My username on Twitter is @AATTopTutor. Feel free to follow me, feel free to tweet me. I quite often post useful, relevant links to blogs and online lectures like this. Over the last few years, First Intuition have been really excited to win a variety of awards. We were awarded UK Accountancy College of the Year in 2010, 2012 and 2014. 3 times in 5 years, which we were extremely proud of. I was personally very touched to be awarded UK Lecturer of the Year in 2011, based on nominations by my students, and we were also nominated for Study Resource of the Year in 2013. We've worked very hard in the last couple of years on our online resources and our material. Let's have a look at the example I'm going to work through with you in this short online lecture. It's looking at cash flow forecasting and particularly forecasting cash receipts from customers. This is very typical of the sort of task you might come across at your level 4 studies. So we've got here some sales anticipated by Rosalind's business over the next 5 months. Now these are the sales that they're expecting from month 1 to month 5, and you can see a gradual increase in the level of sales. Now that's the revenue that they would be recognising in each month. That's the level of the actual sales they've made to customers. The thing we have to remember is that's not necessarily going to be the amount of cash that we're receiving, because often customers don't pay you straight away, particularly if you're selling on credit. You might find some of those sales not received until later months. So we're then given a bit of information about how the sales break down. So firstly, we're told 20% of the sales are made on cash terms. Now, when we talk about cash terms, that means that they would have been settled immediately. So any month 1 sales made on cash terms would be received in month 1. No worry about a delay there. But we are told that the remaining sales, now if 20% are made on cash terms, I'm thinking the remaining 80% to make up to 100% will be made on credit. So these are customers that aren't settling immediately. Credit means they will be settling at some later date. Now we're given a bit more detail about these credit sales. Of these credit sales, 20% actually pay in the same month as the sale. So even the credit sales made in month 1, some of them are going to pay during month 1. Now, one thing we have to be a bit careful about there is that's 20% of the credit sales. Now remember, the credit sales were only 80% of the total sales, so we're going to have to take account of that. 50% of the credit sales pay in the following month, so not quite as quick. They wait till the next month before they pay, and again, remember that's 50% of the credit sales, so 50% of the 80% that was credit. 25% will actually pay even slower, 2 months after the sale was made. So for instance, from month 1, some of those sales won't be paid for until month 3. Now one thing you may notice is that if you add up 20% paid in the same month, 50% paid in the following month, that's 70%, plus 25% paid 2 months later, that's actually only 95% of the credit sales that are paying either in the same month, the following month, or 2 months after. We're told that all other credit sales are considered to be irrecoverable. They go bad, we don't receive the cash, which if 20 plus 50 plus 25 comes to 95%, I'm thinking that therefore 5% of our credit sales will have gone bad and we don't actually ever receive the cash. We're then told a little bit about why some of those customers were paying so quickly. Credit customers who pay in the same month, if you remember that was 20% of the credit sales, they're paying so quickly because they get a settlement discount. They get a 5% early settlement discount. Presumably that's what encouraged them to pay so quickly. Now what we're actually asked to do here is identify cash budget for receipts in months 3, 4 and 5. Now for the purposes of doing this, and what I'd suggest you do in the assessment for this kind of question is get a sheet of paper so that you can do a little working. I'm actually going to consider month 1, month 2, month 3, month 4 and month 5. Now it's only months 3, 4 and 5 I'm really interested in, but I think it makes sense to look at all 5 just to get your head around what's going on. And if I start by just thinking about what the sales figures were that we were given, so that's the original figures from 200,000 in month 1 up to 280,000 in month 5. So let me just note those down. So I've got 200,000. If you remember, it was just increasing very slightly every month, so up to 220,000, to 240,000, 260,000, and then up again to 280,000. Now those are the sales figures, so they're going to be my starting point for working out my cash receipts, but they're not the actual cash receipts because customers are not all paying in the month of the sale. Well, how can I start breaking this down? And what I'm going to do is I'm going to start with month 1. Now you might say, well, why am I starting with month 1? We're actually only interested in months 3 to 5, but there is method to my madness, so bear with me and we'll see why we need to think about month 1. Now, of month 1 sales, well, what were we told? We were told that 20% of sales are cash terms. So actually, some of those month 1 sales would have been cash sales. And cash sales, remember, there's no delay. They're paid immediately. So 200,000 times 20%, or times 0.2, I get that giving me £40,000 of cash sales, which would actually be received in month 1. So what I'm going to show in each of my columns here is the cash actually received in that relevant month. So some of month 1 sales are received in month 1. We would then have the credit sales that were made, the other 80% of the sales. Now remember, the credit sales, well, they spread out a bit, don't they? Some are paid in the same month, some are in the following month, and some are 2 months after the sale. Well, 20% are paid for in the same month. Now, as we do this calculation, let's be very careful, because this is extremely easy to get muddled up. Now, I'll show a full working here. So, month 1, we had 200,000 of sales. Now, we've already dealt with 20% of that, because they were the cash sales. So, the full level of credit sales would be the other 80%. Now, 200,000 times 80% is 160,000, which kind of makes sense because 160,000 plus 40,000, that's how your 200,000 breaks down. So 80% of the sales are on credit. What percentage of those are then paid in the same month? Well, 20%. So 20% of the 160,000 is paid during the same month, i.e. during month 1. Now, 20% of 160,000 at that point is now £32,000, but we're not quite finished yet, because why did they pay so quickly? Because they get a 5% discount. So I'm not actually going to receive the full value of those sales. If there's a 5% discount, I'm only going to receive 95% of the value of the sale. That's the actual cash they will pay me. So let's go through that from scratch. So the month 1 sales were £200,000. Times 80% for the credit sales, times 20% for the number of those credit sales paid in the same month, times 95% to account for the discount that those customers would have received. Now that gives me a figure of £30,400 that's actually received during month 1, relevant to month 1's credit sales. Now those are what's paid in the same month. We've then got what's paid in the following month. Now remember, this is still based on month 1 sales of £200,000, still based on the fact that 80% of them are on credit, but these are now the ones who pay the following month. And who pays the following month? Well, 50% pay in the following month. So if I now multiply that by 50%, so 200,000 times your 80%, which if you remember was 160,000 total credit sales, 50% of them will pay in the following month. Now there's no discount for them, so I get to receive the full cash value. Now I get that coming to 80,000. The thing I need to remember is that's not going to be received now till month 2. So what you can see, and I'll sort of colour code as I go along here, we've got sales in month 1 gradually kind of dribbling in, some in month 1, but now some coming in month 2. Now we'll also get some of these coming in 2 months after the sale. Now in terms of working, again it's based on the same 200,000, that was the sales in month 1. 80% of them were on credit, the £160,000 in total. What percentage of them come in 2 months after the sale? Well, 25% of them. So the remaining 25% being received come in 2 months later, and 160,000 times 25% is 40,000. Now then just got to remember that's going to come in month 3, and again to colour code, that's the final little bit of month 1 sales finally dribbling in month 3. Now remember, we've only actually accounted for, let's have a think about this, we've accounted for 20% coming in the same month, 50% the following month, 25% 2 months later, and remember that only comes to 95%. There is some irrecoverable or bad debts, but I don't need to deal with that anyway. All that means is I don't receive the cash, so don't be fooled into putting the bad debt as a negative somewhere. Bad debt doesn't mean you're paying cash out, it just means you're not receiving it in the first place. So I've dealt with the entirety of month 1, and I'm hoping you can now see the method in my madness for why I did look at month 1. Because of the credit pattern, can you see some of month 1's sales are going to be coming in month 3, which is what I was interested in, wasn't it? Now the good thing about this sort of example is once you've dealt with 1 month and worked through the calculations, and you can see the little workings I've got here, generally it's going to be the same month after month after month. So if we remind ourselves what happened in month 1, the cash sales were the sales figure just times 20% on cash terms, that was the 40,000. The credit sales then trickled in over 3 consecutive months, some in the same month, which was 80% of the sales value because that's what's on credit terms, times 20% who paid in the same month, but at a 5% discount we only received 95% of the cash value. The following month then was the sales value times 80% times 50% who pay the following month, and then 2 months later the sales value times 80% times 25% who pay 2 months later. And the good news is once I've sussed it for the first month, as we move forward month by month, you can effectively just apply exactly the same workings, but to now a new sales figure. So for instance, month 2, that was 220,000 of anticipated sales. What will therefore be coming in month 2 in the form of cash sales? Well, it's just going to be 20%. So effectively all I actually need to do is now adjust the working we've already done and just replace 200,000 with 220,000. And 220,000 times 0.2 is £44,000. We'll then have some credit sales, and again the workings will be exactly the same. I can just replace the 200,000 that we were previously working with 220,000 for month 2. So if you now take 220,000 of total sales times 80% for the credit element times 20% for those that pay in the same month, i.e. in month 2, times 95% because they get a 5% discount, I now get £33,440 that will be received in month 2. We then get in the following month, and again if I replace month 1 sales now with month 2 sales, so it'll now be 220,000 times 80% for the credit element, times 50% that comes in the following month. I think that's now going to give me, and remember to put it now in month 3, that's going to be £88,000 of cash received in month 3. And then the sales that come in 2 months later, again replace month 1 sales now with month 2 sales of 220,000. 80% of them were on credit, and we're now receiving the final 25%, which is 44,000. And because that's delayed 2 months, that's going to come in month 4. And what you can see again is if I colour code, you've now got month 2 sales, you can see coming in, very similar looking pattern to month 1's sales. In fact, you can see how, even though it's only the cash receipts for months 3, 4 and 5 I'm actually interested in for the task, can you see we do need to be working on month 1 and 2 because they do have a trickle through effect into those later months. Well, same sort of idea now that we can apply to month 3. So if I just start amending my calculations to reflect now 240,000 of sales, so 20% on cash terms which come in the same month. So I reckon we'll have £48,000 cash sales that we get in month 3. And then if I just quickly, I'll do it all in one go this time, if we amend these workings to reflect the fact that we're now dealing with 240,000 of sales being made. So what credit sales are received in the same month? Well, 80% of the 240,000 is your total credit sales. 20% of them pay in the same month, and we only receive 95% of that because of the discount. So that's 36,480 that we're actually receiving during month 3, relevant to month 3's credit sales. In the following month, we're going to get 240,000 times 80% times 50%, which gives me 96,000 coming in month 4, and then 240,000 times 80% times 25% gives me 48,000 coming through in month 5. And again, if I colour code, you can see the connection between those flows coming in from the month 3 sales figures. And again, can you see the way that once you've got 1 month sorted, it's just rolling forward the same calculations to base on a different initial revenue figure. So for instance, month 4, we're now dealing with 260. So if I go down, just repeat my calculations, but now replacing with the month 4 revenue. So we've now got 260,000 to use. This would be the advantage of having a sheet of paper with nice clear workings of what you're trying to do, so you can actually amend your own workings. So cash sales, 260,000 times 20% is £52,000 that would be received in month 4 for cash sales. We'll also receive some of the month 4 credit sales, 260,000 times 80% times 20% times 95% gives me 39,520. The following month, we're going to receive 260,000 times 80% times 50%, which is 104,000. You can see that's coming in month 5. We would be receiving some of month 4's sales in month 6, 2 months later. In fact, it would be 260,000 times 80% times 25%. So we would be receiving £52,000 in month 6, but actually we're not interested in month 6, so I don't need to worry about that. But just for completeness, you can see how month 4's sales come trickling in, and you can see a very similar pattern to months 1, 2 and 3. And then to finish us off, we can now just apply the same basic logic to the month 5 sales figure. So if I amend my calculations one final time, hopefully you can see that once you've got the first month sorted, it's pretty predictable and repetitive here. So I've now got 280,000 as the sales figure to work with, but the same basic calculations we're going to be doing. So what are the cash sales? Well, 280,000 times 20% is 56,000 of cash sales that will be received in month 5 itself. We'll also get some of the credit sales, so 280,000 times 80%, which is the credit element, times 20% that pay in the same month, times 95% because they take a 5% discount, gives me 42,560. And again, you can imagine we will be receiving some of month 5 sales in month 6 and month 7. I'm not really interested in this, but just for completeness, if I take the 280,000 times 80% times 50%, I would be receiving 112,000 in month 6. I'm just not that interested in this for that task. And then 2 months later, we'd get 280,000 times 80% times 25%, which is 56,000 that would actually be received in month 7. And I'm really not interested in that because it's only months 3, 4, and 5 we were asked to come up with cash receipt forecast for. So in fact, to finish us off now, all I now need to do is add up, and don't include the sales figure, I just want the cash receipt figure, so just adding up the columns of figure in the 3 relevant months I'm interested in. So month 3, month 4, and month 5. So in month 3, we're receiving 48,000 of cash sales from month 3, plus £36,480 worth of the credit sales for that month, plus 88,000, which is actually still some of the sales from month 2, plus 40,000, which is still some of the sales from month 1. And I get that coming to a total in month 3 of a receipt of £212,480. Month 4 then I've got 52,000 plus 39,520 plus 96,000 plus 44,000 gives me a total of £231,520 I'm receiving. And then in my final month, to finish us off, month 5, I've got 56,000 of month 5's cash sales being received in the month, plus £42,560, which is some of month 5's credit sales, the ones who pay quickly because they get the discount, plus 104,000, which is some of month 4 sales now being paid off, plus 48,000, which is some of month 3 sales being paid off. And I get a total now of £250,560. So in answer to the actual task here, what are the cash receipts in my 3 relevant months? It's those 3 figures there that they would be interested in me inserting in my assessment. Now you can see fairly involved. I'm hoping you can see there's a nice routine you can adopt here, and I think the key is get your head around the first month. So I took a bit of time to work out what was going on in month 1, making sure each of my calculations was accurate in terms of the cash sales, the way the credit sales split down, particularly being a bit careful with how the discount affected the receipts in the same month. So once I'd got month 1's figures in green there sorted, actually I found it quite easy to roll that forward to the following months. Well, I hope you found that useful, just as a way of working out how to approach those. Thank you very much for your attention, and I may hopefully see you on the next one. Thank you very much.